Hello, everybody. Welcome. It's Sunday. Thank you all for coming. I see all the familiar faces out there. Thank you as well to the mods in the chat. This weekend, the Q&A questions are very interesting. First of all, we'll look at how to spot trends, weekly, weekends, monthlies across Bitcoin. We'll analyze what the price of Bitcoin would be if there were no ETFs down to the dollar. We'll look at a bunch of patterns. We'll look at key insights as to how to pair trade, how to set up a pair trade, how to backtest, etc. We'll look at the impact of Fed cuts on things like solar industry, like Enphase. We'll look at longevity and investing in that space, which is super interesting. A company called Kinsale Capital and Tesla, and what would happen to Tesla if there was no more Elon, and so much more. So let's just jump in. Thank you all for coming. Yeah, without further ado, and of course, none of this is financial advice ever. All the questions come from the team at Patreon. Thank you, everybody in Patreon. I love you all every day. So the first question is from Dung Beetle. Hey, Dung Beetle. Now, it may be interesting to note, not only does the price rise on weekends, we're talking about Bitcoin here, but it also seems to drop at month end. I'm assuming people taking funds to pay rent and bills. Maybe an interesting add-on to the weekend chart. And take care, and it's great to be part of the community. Well, thank you for being part of the community. This is an interesting question, and you know I love to look at data. So let's break it down. And there's some interesting findings here as well. First of all, what I did was I analyzed the weekend price action going back 11 years. Now, 2013 and before, the data was too choppy. So I just went back to 2014, January 1st, and I calculated all the price action. This was very stunning. Now, the number of positive weekends, we had 252. And we had 251 negative weekends. You cannot make this up. The average gain and loss on a weekend, this is crazy, 4.74%. Going back 11 years, of course, lately it hasn't been that high. It's been very unvolatile, I should say. The average loss, 4.13%. Now, what's really interesting about this is it's nearly a perfect balance. And again, just to reiterate, these calculations are based on the weekend price. I took the price on a Friday, close of stock market, and took the price on the Monday morning at 6 a.m. Pacific to see exactly what's going on. The results show a nearly equal distribution of positive and negative weekend price movements over this period. Stunning, except when it's positive, it's more positive than negative. And the magnitude is so important here. Slightly higher than the average loss in other... sorry, I thought I heard something. It was wrong. Everything's right, I assume. Let me know in the comments. But anyway, this was fascinating. But there's more. So not only did we look at the weekends, we looked at the month and try to figure out what's going on, and then try to get some handle on where all this data is going. So on the monthly performance, going back 11 years, positive months, 69. Negative months, 62. Zero values, 1, no change. And the average positive percentage is 3.01%, and the average negative percentage is 2.54%. This is interesting. So it shows you that the weekends are definitely more volatile than the months, which is a stunning finding. But overall, things do better. Because Bitcoin goes up, these results are going to go up. Now, if you do analyze since the ETFs happened, and since January 11th, yes, they go up at the weekends, at least they did, because typically what would happen was the ETFs would buy on a Thursday or Friday, and because of T+1, they don't deploy that capital till Saturday, and that drove a bump. And sometimes Sunday is volatile because China wakes up and buys. But that has failed to be the case over the last couple of weeks because the markets have just sucked in August. But let's take this one step further. And you're right, there could be a possibility that, you know, on weekends, people, or towards the end of the month, people need to sell, reallocate, reposition, resize, take profits, pay rent. That's possible, but not a big impact that I could find. Now, let's look at some charts because this is more interesting as well. If we look at the weekly candles, going back in time to however many years we went back to the 20-somethings, you can see here the weekly candles perform a little bit strange. Now, it's very hard for me to understand this chart without analyzing a bit further. So what I did was I overlaid it on the ATR model. And this shows us where the bear market is. The red shadows we have coded in, they determine the bear market for each asset. And this is the bear market for crypto. So you can see weekly candles on the ATR model, typically a lot of them in the bear market and less of them in the bull market. And we're in a bull market. And just look at that stretch. I know people are complaining. It's like, oh, how come Bitcoin's so weak? Just go back to the beginning of 2023, ladies and gentlemen. Look what we did. It went from $16,000 straight up to $73,800, and people are still complaining. Yes, we have this chop solidation post-halving. It's running a little longer because of some headwinds of the 5Gs, as I covered as well twice this week. The Goxes and the Genesis and the Grayscales and all that dumpage. But that soon will be flushed, and then we'll move on. So when you zoom out and look at these weekly candles, it's very important to take into account the very obvious tops, which are signified here by little red flags of when to sell, and the bottoms when to buy. Real simple. And the more time you have, the weekly is very, very precise on this. Now, on the monthly, same thing again. Bear markets, bull markets, where are they? Well, overlaid on the ATR, here you can see it on the monthly candles. Again, in the bear market, literally 3 green monthly candles in the whole bear. The rest, maybe 4 little ones. One was kind of a break even. The rest were all red. And the bear lasted 15 months, 16 months. The first time, that was back in 2018, 2019. And then you can see more recently, the bear market was far more vicious last time around as well. But again, we're going from a lower base. So to go from, say, $10,000 to $4,000 doesn't look too bad. Those withdrawals don't show up here. I should have turned on the log chart for this. I didn't. Sorry for that. But the point is, again, weekly charts. The monthly candles right now in the bull market we are in, you can see at the very top, after that rampage from the beginning of 2023, straight up to all-time high, we have had 2 that are equal, green and red, equal, green and red, green and red. You see the pattern, everybody? Next monthly candle will be September, and that will be green if this pattern continues. So right now, literally, it's bonkers. To summarize again on the weekly side, they are actually bang on equal. On the weekend action, bang on. And on the monthly, there's more of an edge to it going up. So I hope that helps. We are not able to identify. It probably warrants more analysis to look at exactly what happens on the weekly and on the monthly in bull and bear markets. That'll be fun. Either way, bull markets, we go up, and I still believe we are still in a bull market. So I hope that helps. Next question is from Kosi Troik. Hope I got that right. What would the Bitcoin price today be without the ETF approval? Brilliant question. And I think about this all the time. And we have a model for that as well. We model everything here on this channel. It helps take the emotion out of decision making. So right now, when we look at this model, basically what I did was I calculated the total spend, the ETF spend. The net flow into the ETFs is $17.5 billion. Remember, we had $20 billion come out of Grayscale, plus a net 17.5 on top of that. So the transfer, it only makes sense to look at as in terms of net spend, that's 17.5 billion. You multiply that by my old IA multiplier of 21. You take it back to January 11th. You calculate the price of Bitcoin on January 11th. I can't remember what it was exactly. And I added it to the multiplier, the impact of the price of Bitcoin. I think it was 42,000 at the time of the halving. Without that, no, but at the time of the ETFs. If you pull the impact on the price of Bitcoin out, i.e. you put $17.5 billion into Bitcoin from the ETFs, that increases the price by 24,500. You deduct that from the estimated future price of Bitcoin, 66,500, you get 42,000. Now, there is a problem that I know you guys can see here. See the problem? Yes. We are under where the price should be, despite the ETF spending. We should be at 66K. We are actually under 60K right now as I speak. So, again, I believe if there were no ETFs, we'd be at 42K. So, be happy for the ETFs because they have inflated our bags a lot. All right. So hope that helps. I like that question. Short and sweet. Next one is from Rory S. Hello, James. I have not missed a video since I joined in November 2021. Awesome. That's exactly when I began, but didn't really begin in no, I began a little bit before that. I don't even remember. It's so my head spins. Anyway, do you have plans to trade options on Bitcoin ETFs? The answer is, as you know, I am predominantly an options trader. That's what I do. My background will talk more about that in a little while too, as well. But there's a couple of things I do want to note regarding the ETF options. So they are anticipated to begin trading, some hope, before the end of this year or very early 2025. You know, the SEC are dragging their feet, but it's normal for all ETFs to have options. They are coming. Now, they're not available on the spot ETFs, but again, as an options trader, I currently prefer trading options on MicroStrategy, but I think it's also very important. If you are trading options, you should at least have an intention or have some of the underlying asset. And right now, I do not own any spot ETFs. And I don't know if I will either. But what is interesting, though, thinking about this, depending on the liquidity and the precision of these options, there could be great ways to put big hedge positions on using the ETF options to protect your Bitcoin bag without actually selling it in the first place. So that's something I may employ, like a collar strategy or a calendar strategy. I will be looking closer at that when the time comes. And hopefully they'll be available by the time we get to the tippy top so we can hedge and protect our bags on the way down. And you'll see plenty of videos on exactly that, how I profit take, how I hedge, etc. So make sure you subscribe if you want to see that type of stuff. Next question 2 is from Wolfshin. This is kind of the topic for today. For pair trading, how do you choose which asset is the numerator, denominator when using the IA tools? For example, I had been using ETH-SOL since it gave us a big fat ratio, but then in a recent video, I noticed you use SOL-ETH, which surprisingly gave quite different results in the optimized trend. So this is super interesting. I'm just going to take it deeper into actual pair trading because it's such an important topic and it's nuanced. So first of all, let's look at some charts. Let's keep it real simple. ETH Bitcoin. All right, this is on the ATR model. You can see here how it works. Obviously, the red shadow again is the bear market. And with ETH Bitcoin has been down ever since the beginning of the bear. It's stunning to even think about, but that's exactly what's happened. So when you have the whatever pair is first, that is what you sometimes look at. I'll explain how I do it, but I just want to showcase that when you have ETH Bitcoin, when something goes down, that means the first asset is losing. But the win rate on the ATR model on the daily is 89.71%. Now, Bitcoin ETH, this is the mirror version of that pair. And you can see the win rate is 89.47%. And again, since the beginning of the bear market, it's up, which means Bitcoin has outperformed Ethereum. Now, there's some complex things. Let's get into factors to consider. So first of all, as I always say, everything is a pair. Now, sometimes there are standard ways to pair assets. For example, euro dollar. Euro over US dollar is the common format in Forex trading. Other things that you need to keep in mind is asset size. Some traders put the bigger or more established asset at the bottom. So for example, in my case, I'd have Bitcoin last. So I do Sol Bitcoin. Bitcoin is the more established, bigger asset. Then you have to look at statistical tests. If one arrangement gives better statistical results, like co-integration, you may want to choose that setup. And then there's also spread behavior. And this is how the price difference, the spread moves. Sometimes it's more predictable over one setup over another. So it is, as I mentioned, it's very nuanced. It depends on who you are. The way I roll, okay, my style is, depending on what I'm trading, I like to put that first so I can see how it's performing. So if we go back to Imagine I was trading ETH. I don't, but imagine I did. This would be a scary picture for me. It's like, ETH is not doing well. It's not going up. So the easy way I always think about it is I put the one first, and I want to make sure the chart is going up, and it looks like this, not this. This is bad. This is good. So if you look at my style, so there's a couple of things. How it affects your analysis. The order of assets affects the size of the ratio, which changes how you interpret the data. I mentioned spread patterns too. Different setups will show different results in how the prices move together, and that can affect trading decisions. And most importantly, trade signals. The signals your model gives you when you buy or sell can change based on how you arrange the asset. And risk management, very, very important too. You might need to adjust your risk controls like stop loss levels, etc., based on the arrangement. So for example, going back to here, imagine you're in ETHBTC. You decided to pivot from Bitcoin into ETH. You're holding ETH now, and you see it turn against you hard. You would place a stop loss level like at 0.075, and then you get out when that hits. And you can set up your alert on the chart as well when you do that. Now, the other thing, the reason I always put the asset I'm trading most first is it helps me calculate something like a dollar. So, think of, for example, Sol ADA, which is Sol divided by Cardano. In the very beginning, there was about 4 Cardano per Sol. Now it's 431. So if you think of the asset like a dollar, like a melting ice cube, you'll know very quickly going from 4 to 431, and people are still in that. You don't want to be in that, okay, at all. So that's kind of the way I do it. Now, regarding things like models and trends, of course, they're going to be different because the pair is inverted, but they should more or less give you close to the same signal. But do what you're more comfortable with. Do what's natural for you. That's the way I do it. By the way, I put all the pairs. I have multiple things paired against everything. This is Sol paired against all crypto. And you can see here, I took it this morning, actually, everything's green. So Sol has been outperforming every other crypto. Avalanche, Elrond, HBAR, Matic, Near, Polkadot, ICP, Bitcoin, Cardano, Ethereum. And that way I make sure I'm in the winning asset. If there's other things that are red here when paired against Sol, that means they should get my attention. Why are they beating Sol? And am I on the right asset? Am I on the right horse? I always check myself every single day. I look at those pairs. And my best practices, and sorry for being so long-winded because this is the most important thing. Again, everything is a pair. Bitcoin USD, that's a pair. If you sell your Bitcoin, you move to dollar. If you sell your dollar to Bitcoin, you move to Bitcoin. Okay? It's not hard. And US dollar is a bigger asset, so it's at the back end. So that's the easy way to think about it. Also, test both ways. Try both setups to see which works better for your strategy. Also, consider liquidity. Put the easier to trade asset at the bottom. Very important. Like, for example, if I'm pair trading crypto, I use my asset, my currency is often Solana, and I trade that into other assets. Also, always check the performance. That's why every one of our tools has a back test with it, and your strategy with both setups, and compare which one performs better, and stay consistent. Once you choose something that fits your eye, like Tiger Woods in a golf course, certain courses fit his eye, certain ones don't. But once you have your setup, stick with it for uniformity in your analysis. It's absolutely critical. So I hope that helps. A lot to digest there, but that's kind of the way I do it. And they should be relatively tight. But again, make sure you pick the winning, most better performing asset first, the big asset second, or the dollar second. Hope that helps. Same thing for Forex too. Next question is, hi James, thanks a lot for sharing your tireless efforts with the world. My pleasure. What is keeping MicroStrategy out of the S&P 500, and why doesn't Saylor fix the problem? This is a super interesting question, and technically MicroStrategy is ranked about number 300 in the S&P 500. So it should be in there, but there are some rules that the S&P 500 have to take into account. First, let's break down a couple of those rules. First of all, the there's a couple of factors. One is they need to have 4 consecutive quarters of profitability. I'll show you a chart on that in a second. S&P 500 does require this. And so far, MicroStrategy does not meet that requirement. Also, from accounting standards, MicroStrategy has been pushing for changes to the Financial Accounting Standards Board according to standards that would allow digital assets like Bitcoin to be reported on balance sheets, and adopting these new standards could help MicroStrategy meet profitability requirements. We'll talk about that in a second too. Also, timeline and complying with accounting rules and the way you recognize revenue as a software company all needs to be complied with. And even if MicroStrategy becomes eligible, the process of being added to the S&P 500 takes time. Some estimates believe maybe late 2024 or 2025 if they meet all criteria. One of the most important ones is this. This is profitability. 4 consecutive quarters of profitability need to be hit right now. Q3 2023, miss, was negative. Q1 2024, negative. Q2 2024, negative. And why? Well, MicroStrategy faces what's called an impairment loss if the price of Bitcoin is volatile. So if price of Bitcoin goes on a rampage, they made huge profits in Q4 2023 because we had a bonkers 2023 for Bitcoin, as we showed in the previous chart. But sometimes month to month, quarter to quarter, the results can be off. And also remember, their calendar is not like a calendar per se for the calendar year. It's slightly off by a month or so. So until they can get this up, we need, I don't see, if the accounting rules do not change and if they still continue to get impairment losses and Bitcoin doesn't go straight up for the next 4 quarters, they're not going to hit that requirement. So that's just the reality. And that's just, you'll notice in life that things are very slow to change. Governments are very slow to change. Rules are very slow to change. Systems, stock exchanges, that's why when disruption comes, it shakes everything up real fast. So that's the answer to that one. Hope that helps. Steve, H1. Hello, James. It feels like the biggest Tesla risk is the absence of Elon. Should the unthinkable happen, how would this impact the short-term and long-term outlook of the company and the stock price? I'm continuing to grow my Tesla bag, but trying to assess this risk. And thank you for constantly sharing your insightful knowledge and analysis of Tesla. This is a great, great question. This is what I think about all the time. I think about double spend problems on Bitcoin. I think about Elon and Tesla. But let me break it down in simple terms. How I see the world. First of all, they have a very senior, very established management team. And I do believe the Tesla vehicle business would likely continue without major disruption. They have established world's best manufacturing process, supply chain process. They have strong brand, popular lineup of vehicles, best-selling cars on the planet in all different categories, which must pain others that have EDS. Anyway, while he has been instrumental in Tesla's growth, the core businesses are strong enough without his direct involvement. FSD, many say it's 99% baked. So the progress may be a little bit slower without Musk's ambitious timelines and push for innovation. Going to 99.999% safe on highways. But we'll see how we get there. But I think the way in which it's learning, it just takes video and compute, and it gets better by itself. It doesn't necessarily need Elon Musk's hand at the wheel per se. Megapack business would continue as usual. The energy storage business and AutoBidder as well are complete. They're just scaling and getting better. The team have that well in hand. There was one thing though, the Optimus humanoid robot project would likely be most affected by Musk's absence. This initiative is still in its very early stages, and it relies very heavily on his ambition and vision to drive. And without his involvement, the project may lose momentum or face significant delays. I forgot to add Robotaxi in there too as a good example. Robotaxi is something that he delayed from 8.8 to 10.10 by 2 months. So we should have that coming up in about 50 days or so. And that'll be big. But he delayed it because he wanted to add more into the robotaxi, either the design or the features or capabilities, and they weren't ready to show it there. He's all about getting it right the first time. That's why they spent 4 years creating a revolutionary vehicle called the Cybertruck. Now, back to your question, what would happen if, heaven forbid, something did happen? I do believe the stock would take a 20% hit overnight, bang, and it would recover slowly. Would it get to the stratosphere where it could go with him at the wheel? I don't think as high, because Optimus is huge. Now, this is my Tesla valuation model, which is blessed by CERN Basher, by the way, and we sandbagged. But things get really nutty really fast into the 2030s. Okay, so according to this, easy $2,100 share price by the year 2030, $5,600 by 2031, etc. Things go really parabolic, really fast, because of the amount of scale and revenue generated by the bots. Okay, CERN Basher, speaking of him, actually, he posted something on Twitter earlier today, and he believes on a per battery capability basis, Optimus bot will generate 911 times, sounds like a Porsche 911, sorry, I remember the number, 911 times the amount of profit a car today will produce. That's how things get so nutty so fast. So hopefully, fingers crossed, everything's good. But Optimus is the big piece of cheese. Robotaxi after that. But you can see here in this chart, I'll blow it up again. Optimus is green and Robotaxi is orange. The rest is crumbs. That's what this game is about. Autonomy, robots, and that's how we play. So thank you for the question, Steve, out there. Appreciate it. Next question. And thank you, Signal 103. This is the first time Never Finished is posted. Welcome to the community. Hey, James, can you give your thoughts on how the Fed rate cuts might affect the solar industry, especially SolarEdge and Enphase? P.S. I love your ugly truth nuggets. Yeah, sometimes it's like, life is too short to have a filter. And now there's so much in play. So let's get into this one. First of all, I do believe, and in full disclosure, I do own Enphase, because I believe it is a huge growth industry. So I do have a position. But I do believe as well, rate cuts will absolutely boost affordability. And, you know, the average solar package costs about $16,000, which is a lot to add onto a home. So I always look at it like building an extension on a home, because you're adding a lot of value. Also, if you're in a place like California, electricity costs have gone through the roof. This is also going to drive adoption, but people haven't been able to finance that $16K, but the rate cuts will help that. It'll also make the payback much more attractive. Sometimes the payback for solar investment is, you know, in terms of getting your electricity savings back, it takes about 6 to 10 years to get that back. And then after that, it's all gravy. And there will be improved financing options and lease terms, which will drive adoption. So I think once it does kick in, you will see Enphase and SolarEdge bounce big time. Let's check out the Enphase chart real quick, just to show you where we are. And this is quite magnificent. Again, the red shadow is the bear market for stonks. Since August 2023, this has been what I call a range rider. That's been riding between level 1 and level 2, like clockwork. That's 80 to 120 bucks. You can't make this up, approximately. And it's a great way to play if you do that. But I do believe it's going to break out of level 2 once the rates get cut. Mark my words. And check how far it is off the all-time high. I mean, we're trading now about $115. All-time high is up there around $360. Has a long way to go. There are many stocks that are very much beaten down and very, very far away from all-time highs. So if you have patience, this could be one to watch. And we'll see where it goes. So bring on those rate cuts. Next question is Fox or us. By the way, I'm doing a lot of questions. Let me know if it's too many or too fast in the comments below, rather than doing deep dives. This is a cool one. Fox or us. Hey, James, I'm 22 years old. First of all, I'm so bloody proud of you being so young and doing this stuff. And you've been watching my videos since 2021. And you've seen a significant increase in both my bag of knowledge and wealth since I started watching you. So happy for you. I've decided I want to take investing even more seriously. What books, courses, programs, other than your amazing Patreon, do you recommend to gain even just 1% of your knowledge? In a video a few years back, you recommended several PhD level textbooks, which I saved. Do you still recommend those for someone relatively new? And you've already changed my life. Thank you. Well, thank you for being here. Let's talk about those books that have kind of shaped me. And these were books that 25 years ago I had at Wharton Business School. And first of all, the one on the left is Investments by Bodie, Kane, and Marcus. This book is a comprehensive guide to investment theory and practice. It sounds like you may have saved it. I don't know if you've read it. I doubt you have because it's pretty heavy going. But it covers everything from portfolio theory to asset pricing, risk management, very detailed explanations of real-world examples that help students of finance understand very complex finance concepts. And it is an essential resource for anybody studying finance. By the way, we have all of these books in our Discourse library, so check that out if you're in Discourse. The other one is Options, Futures, and Derivatives by John C. Hull. Before I even saw this book, I had, a decade plus of options and futures experience, but I still learned a lot from this. It's a classic in the field of derivatives. It provides introduction to options, futures, and other derivative instruments. And it's really good for its very clear explanations and practical approach, and crucial for understanding how derivatives work and how they are priced and how they can be used in investment strategies. And also the final one is kind of what I do an awful lot in my life. I model everything. I'm like a spreadsheet jockey, you could call me, by Cliff Ragsdale. And this book focuses on using spreadsheets for modeling and decision-making in business contexts. It has lots of practical skills in quant analysis, decision-making, which are very important for evaluating investments, opportunities, etc. This is basically my 3 favorite books from Wharton, and they gave me an even stronger foundation in theoretical and practical aspects of finance that I use to make money. So they're my 3. Check them out. They're worth it, but they are very heavy going. I mean, these are like 1,000 pages long or more, but well worth it. Now, in terms of courses, I'm not one for courses. I don't do courses. I believe you can learn faster. I need, a course would never move fast enough for me. I need to consume a voracious amount of data in a very short window of time, so I just would not be able to focus. But speeding through a book, yes. And learning yourself, watching videos, reading little nuggets that can be stacked full of information is all you need. Courses, nah. So yeah, and what else? Maybe some other tools, but yeah, reading I think is my favorite way to learn, and then practice. Next question, Ron R. Can you please do a review compendium score on Kinsale Capital Group? Ticker is KNSL. I bought 1 share back in 2021, and this thing just keeps going up. The chart looks amazing. Is this still a buy, or is the best already had in its run-up? So, Ron, this is an interesting one. I never actually heard of it, so I had to research it. Let's see what I came up with. And normally, literally 9 times out of 10, people ask me to look at a stock. I slate it. Guess which one this one's going to be in? We'll see. This is really good. It is one of the best stocks and setups I've seen for quite some time. It's a US-based company. It specializes in excess and surplus lines insurance. And this is the type of insurance designed for risks that are either unusual or higher in risk, or the standard insurers walk away from. Now, there's probably one of the reasons why this company is doing so well is you have a lot of mess in the world. Like if you take a place like Florida and California, you got fires, Florida, you got hurricanes, and you got bad drivers all over the world. You got a lot of carriers, which are insurance companies, walking away from risk and just dumping it, just leaving markets altogether. All the big carriers have left Florida. You cannot get homeowners insurance now to save your life in Florida. This is where companies like this step in, excess and surplus lines carriers. Same thing in California. All the property markets are just leaving. Good luck trying to get home insurance in Tahoe. And if you can get it, it'll cost you $30,000 for a policy. It's nuts, but this is probably why this thing is growing so well. Blue is revenue, keeps growing quarter to quarter like clockwork. The net income is solid, and EBITDA also hanging in there pretty good. And insurance is seasonal. So towards the end of the year is when they typically do best. You'll see that in year end, like December 2024 results. That'll be their best quarter of the year. Now, the debt is a little bit high, but the cash is growing very fast, so I'm not too concerned about that. And they're probably reinvesting in a lot of business. There's also another chart that I have never seen a GF score so well-rounded in a spider chart, where growth, profitability, value, momentum, financial strength are all perfect. Pull up any company, you will not see a well-rounded. This thing is firing on all cylinders really well. Very impressive. And let's look at the chart. You saw the chart. Is it running out of gas? Well, this is what I see right now. So again, it's on the ATR model going back many years. You can see we're in the buy zone. We're spiking up to the right. I see this going to about 550, probably towards year end, because Q4 results will be very strong. However, fair value is about 507. I think it's trading at 480, so there's a lot of upside. But at 550, that's where I would sell a call and hedge. Your problem is you only have one share. You need 99 shares to sell a call. But yeah, this is firing on all cylinders. Solid company. I like it. I don't own it because I don't play in insurance. I play in disruption. But, if this thing did get bonked down, so when I see things like this, and if I saw it got knocked down to say 350, 370, I would have a hard look. I'd find out the reason for it falling. If I was comfortable with that reason, I would invest and ride it back up to 550. That's the way I play. Kind of like a disruption bottom fisher. Hope that helps. Next question is from Crystal A. Peter Diamandis is very well involved in biotech, gene therapy, longevity, and believe though we are in a winter period for these companies, as they will be as big as AI or crypto in the next decade. First of all, nothing will be as big as AI in the next decade. Just want to put that out there. It could be very large. Longevity could be huge, but I think AI will come first. But there's a caveat to that, because this is related to AI, which I'll talk about in a second too. Is AI looking into companies? Am I looking into companies in that field that could be disruptive, but very price depressed now, or we can invest in? So, first of all, I kind of answer this from the perspective of checking out this fellow that you mentioned, Diamandis. He has a solid bio. He is an American entrepreneur, MIT, Harvard, MD. So he knows medical, which is important. He is the chairman of the X Prize Foundation, which is a really cool organization, and Singularity University. I don't know if anybody uses that anymore. Innovations. He's the co-founder of Space Adventures and Planetary Resources. So he's done some very interesting stuff. Now, let's talk about this space, because it is interesting. Who doesn't want to live not only longer, but also healthier? That's the most important thing. There's no point in living long if you're not healthy and miserable and in pain and such. But this is kind of digging into it. He is deeply involved in biotech, gene therapy, longevity research, and he believes that they have huge potential for growth in the coming years. And yes, you're correct. This sector is experiencing a downturn, and he does believe there is huge amount of growth. So I do believe, when I think about this space, and I'm not an MD, but rapid progress in areas like genome sequencing, gene editing, AI-driven drug development is going to be huge. And there's a huge focus on health span, and that is, as I see it, the most important thing is not extending life, but extending it and making it healthier, having healthier years of life. I probably said that in a very crude way, but I think you understand what I mean. And then AI, which you mentioned, bigger than AI. No, this is converging with AI. This would be a subset of what AI does. And that is the integration of AI and robotics with biotech is expected to lead the breakthroughs. And that could be like when people say, how can robotics make you live longer? Well, maybe a robot can do a very tricky surgery on a brain tumor that would be otherwise inoperable. That's kind of an example there. And then all the drug development can be accelerated, tested, new things can be discovered. New DNAs can be sequenced to prevent chronic illnesses and all that type of stuff. So this is absolutely very exciting, but it does dovetail perfectly into AI. So the investment philosophy as well of Diamandis, and I'm trying to get inside his head, figure out how good he is, and if what he's saying is true. So he advocates for a couple of things. He says, don't chase money. I say don't chase replace. He says don't chase money. He advises entrepreneurs to focus on their passions rather than pursuing financial gains. I agree with that. He has exponential thinking. He emphasizes investing in and developing exponential technologies. Yes. And he also encourages tackling big, audacious goals rather than incremental improvements. I like that too. So checking a lot of boxes here. But there's a few things to note. First of all, he is behind some failed ventures like International Microspace, small satellite company founded in 1989, failed. Constellation Communications, failed. Also, sometimes, and you got to watch this too, sometimes people can be overly optimistic about predictions. Even Elon Musk is guilty of that sometimes. His timelines can be off, but he always delivers. But Diamandis also has a lack of focus. He's involved with 20 different companies across many industries, and I think he's spreading himself a little bit too thin. I prefer people that really focus on core things that are kind of interrelated and have S-curves that complement each other. For example, self-driving cars and robotics, one example. He also has some conflicts of interest as well, and he has limited experience in certain fields. Now, getting back to, should we invest in biotech companies in this space? My lesson is, I believe firmly that biotech is riskier than crypto. It is a bloodbath out there. It is absolutely extremely difficult to fathom if these companies have a drug or a process or a technique that is revolutionary. And 95% of them go to zero. So I wouldn't touch it. I like the space. If I can find something that is very AI adjacent and tied directly to data where you and I can fathom the probability of success, yes, I would invest. If it's investing in a biotech company that say they can make you live longer, no, I wouldn't touch it. So I think there's far safer places to be right now, like Bitcoin and Tesla. I benchmark everything against those two things. And if it's riskier and less return, walk away. If it's less risky, more return, I look at it carefully. Hope that helps. And helping animals. This week, we donated to... Sorry, I'm trying to have some tea. Drinking. I shouldn't be drinking and doing a video. But we donated to Northern Colorado Wildlife Center to help support their wildlife relief efforts after local fires have erupted. It's funny, I just spoke about fires and insurance companies pulling out of markets. I forgot to include Colorado because that's probably the same thing is happening there like in California. And this donation was made in memory of Delilah the cat. Tomorrow we have DCA at the same time. And sorry, choking on my tea. Don't forget to join myself. CT will be back with Mando and Marty. It's cool. And everybody will be there tomorrow. Thank you all for coming. Don't forget to subscribe and like. That was the Q&A story. Now I'll answer some live questions from you all. And we have Doc Intern is back. Our regular. First of all, Doc Intern just got back from a weekend trip with the family. 2 hours each way. Entirely FSD. The most relaxed drive ever. Every car manufacturer will want this 100%. You are dead right, Doc Intern. In fact, we have another member. Those of you in the community who know Gary. Gary drove 6 hours from Florida to Georgia in his brand new Model Y FSD 12.5.1, and he was blown away. He just got the car, and it just took him like From the time he got delivered the car to driving in 6 hours by itself, he couldn't believe it. So a lot of people think this FSD thing is not real. It absolutely is, and every car manufacturer will want this 100%, and every car manufacturer cannot make it. So that's where we are. And HWH, no, why is the bear statue up? Are we bearish? We are a little bit interim bearish. Yes, we are right now. I don't see us getting out of this until something changes, and I cannot see those catalysts until maybe September. So for the next 12 days, the bear statue may be up. HWH, thank you for that. Rusty Bot, where can we find the tokens that are above the dotted line on the compendium score? That's a great question. So we actually have a team that manages and maintains the crypto compendium and the SCP profiler. And that is kind of their business. If you want, the thing is, there's so few assets that score well that giving that away would make the rest of the thing kind of redundant. So it's a big part of kind of their living. So please go ahead and pick your reports that will help you make decisions. But as you know, from the top 500, actually, we're expanding the crypto compendium to beyond the top 500, and now it's about the top 800 at this stage. And very, very few score above what I believe is our threshold of scoring at least 6.3, 6.4 on the compendium score. Very few assets are that way. And in fact, lately, we've seen how bad many assets perform. I covered that in yesterday's video. And it's so predictable. Anyway, let me see. Wonder Twin, I'm already trying to guess James's Halloween costume this year. Oh my God, is it Halloween already? That'll be a tricky one to do. So we'll see what we can do there. And what else do we have? Sorry, I forgot to put my camera on. Oops. Rusty Bot. So we'll see. What I can do is try find a way to expose this, but be in the right assets is really all I can say. Beware of new stuff. Beware of old stuff. You need established stuff with good technology and speed. There's a lot of people out there that still debate with me every day thinking they're in this crap coin and they believe it's going to do really well, but it hasn't done well at all for 6 years and adoption is tanking. And I've given up trying to convince people. They can hold on to their bags and I don't know. So Wonder Twin, Halloween costume. I've done a few different things. I have a few ideas. It'll be fun, but I don't know what it's going to be. I wish, by the way, I wish I could combine Halloween with April Fools because I've got so many ideas for April Fools jokes. I wish I could do that once every month. If we could have one day a month dedicated to me doing kind of sarcastic April Fools videos. Oh, that'd be so fun. I love doing that too. And I got so many concepts in my head. And a thank you as well for your super stickers, Clint, KPM, The Thirsty Sponge, Andy, Brock, Bert Frank, Signal 103, Rusty Woods, Crypto Last Outpost, Digital Assets US, Crypto Tech, The T, and G60 Johnny, and Digital Assets US. Hope your puppy's doing well. I love seeing pictures of your dog on Twitter all the time. Thank you as well to TNT Tesla, Sean Donnelly, KA to American Beijinger, and all the usual suspects for coming. I hope that wasn't too long today. Everybody, get your head around the everything is a pair thing. If you can dial that in and rotate between assets, especially tax-free, it can be game-changing as well. Thanks all for coming, everybody. Have a good night. See you tomorrow morning at DCA. Bye-bye.